Hello, everyone. Invest Like Mike here. We're going to do some chart analysis today. I wanted to go over the long-term macro view of the market, and I want to talk about gold and silver. It's a topic that some people really don't like talking about. Maybe you're not a gold and silver person, but take this as food for thought. This is my perspective, and I've made money on gold and silver in the past for these same reasons, and I wanted to share it with you today. So let's go ahead and share the screen here. One other thing to mention, guys, check out investlikemike.com, go to the podcast section. I'll be posting a podcast with Lewis O'Connor that I recorded last month. I'll be posting that soon. All the audio versions are up here, and you'll see the video versions here. I'm also going to announce officially that I contacted Benj Gallender, and he has been on my podcast before. Go check out the podcasts. He's agreed to come on my podcast again in March, and we're going to do a really nice podcast together. He actually announced recently that if you're subscribed to his newsletter, and some people here did subscribe after learning about him on my podcast here, January 10th, he made a recommendation of Valen, and this company was around $5. And right now, if you go check, it's around $12. And they have a buyout offer. Benj heard certain things through certain pipelines and announcements, and he recommended it as a stock pick. He also has had a really great 2022 where he was very profitable in a down market, and we're going to make sure to get his insights, which is very, very appreciated from an expert like that. So let's go check out the stock market here, guys. So what I'm going to do is I'm going to look at a weekly chart. I'm going to do a long-term chart analysis here. And right here is the recession or correction of 2022, depending on what your opinion is there. And right now, if you look really carefully, let me get rid of those drawings. You'll see here that we've zigzagged our way out of this downtrend. Now, as I've taught in the training course, if you took it with me, you expect a 3-wave move up after 5 waves down. And we definitely had 5 waves, very distinctly textbook Elliott wave pattern to the downside. So I've been predicting this 3-wave movement since November. If you're in the weekly training sessions with me, I've been telling people that throughout December and January, I was purchasing oil and energy, Enbridge, good stocks like Apple, Nvidia, a lot of stocks that I've made some money on. And if you go check out ExxonMobil and XLE, they're busting out to the upside again, which I've held on to. And chart analysis is a major reason why I was able to do that, because I have confidence in what I'm showing you here. And so when you see it break out like this, what does that mean? Does that mean that, the bear market's over? Not really. What it means is, when something's going up to the upside, if you go look here, right, as we're going up, we're going to have little shots to the downside, and then we go up higher because it's still a bull market, right? Shot to the downside, we go up higher because it's a bull market. If you're going to go into a more sustained bear market, then it's going to be the opposite. Okay. So instead of moving up 5 waves, right, like you do in a bull market, you end up moving down 5 waves, up 3, down 5 waves, up 3. It's the reverse of what happens in a bull market. So that allowed me to help time things better. And even the general bull market here, guys, you'll see the trend that was kind of in place here got broken right there. That's around the beginning of 2022 when they confirmed the interest rate hikes. I went to all cash and I made a couple plays along the way, and I'm about 40% or so in right now. Okay, so that's my logic. That's my thesis. That's how I handled things. Let me explain on a long-term basis where I think we're going and why I think that. So I believe that, as I've taught in my course here, you have a huge bull market with a massive inflationary event at the end of it. In this case, it was a pandemic. Okay. In the 90s, you had a big, late 80s onwards inflationary event. And at the end of it, you had a big inflationary event because of the dot-com bubble. Okay. In between those periods, you tend to have a holding pattern where it kind of chops up and down sideways and gets held up on a long-term basis. When you zoom out like this, it really just went sideways for 8 or 10 years. Okay. And I believe that we might have something like that coming. Now, we'll see what happens. If they go and print $4 or $5 trillion, then we're going to hit a new all-time high, I'm sure. But let's go check out what happened in the 70s, which according to Ray Dalio and Kathy Wood, who worked in the industry back then, they feel we are going into something like the 1970s. Okay. So what happened in the 60s, right, leading up to that period? Well, what happened was we had a massive bull market because, the 40s were rough during the war. The 50s were rough after the war. They spent so much money, right? You can't really inflate the economy right away. So you had this huge bull market in the 60s, fueled by inflation and money printing, and the beginnings of the Vietnam War as well was, cost money to go to war. So, we're kind of in the same position now where we're in the middle of a potential war with Putin, and it could get worse in the coming years, right? Well, the Vietnam War kind of started in the 60s, and in the 70s it got worse, right? So it's kind of the same type of a setup. And in the late 90s, I know Bill Clinton was doing stuff in the Middle East. Then we had 9/11, right? And then the war got worse after the crash of 2000. So I feel like we could be in a similar position right now. And if you listen to interviews with Kathy Wood, she said that inflation was 10 or more percent. She said 10 to 15%. Okay. Back here around 1970. And then it only got worse during the 70s. Okay. So they raised the interest rates around 1970, 1969 here, and the market came down. This is, 1969 is like 2022. Okay. That's according to Kathy Wood and Ray Dalio. They believe we're going into stagflation and that we're at a similar time. So what was the situation back here in the 60s after this huge bull market here? Well, they did a lot of money printing. They juiced the economy. Inflation was very high, 10, 15%, which is, similar or close to what we have now. And Kathy Wood and other people have said as well that the way they measured inflation back here in the 60s and 70s, if we used those same metrics right now, we didn't have 7, 8, 9% inflation. We had 15 or 20% inflation right now. And if you go shop at the grocery store, you'll probably know that that's true. Okay. So the way we measure inflation now is far different and more lenient. And so it appears that inflation isn't as bad. But again, after every big bull market that has inflationary events involved, afterwards, when inflation gets too high, you try to tame it through rate hikes. So they hiked the rates and went down until 1970, 1971. Then they had to lower the rates and let the economy go up again. It hit a new all-time high, right? So if you were zoomed in and not looking at a long-term chart like this, you might say, wow, all-time high. Those doom and gloomers were wrong. Not really. They had to raise the interest rates even higher. And now we made a lower low. Okay. So if you celebrated the higher high and you hung on, you were rewarded with a lower low. Okay. So, look what happened in the 70s. Did it make a new all-time high? I guess, but it was very short-lived and it just took your money away anyways if you hung on blindly. Okay. So again, after every big bull market with an inflationary event, you have a sideways pattern, right? Then the next bull market, when they started lowering the interest rates through the 80s, right? It was at 18% in 1980. And by the time we got to the 90s, it was around probably 8, 9, 10%, right? So they lowered it through the 80s. That helps the market go up. Then the inflationary event in the 90s, the internet bubble. Look how much higher it went. Okay. Look how crazy that is when you're looking at it, right? And then we had another sideways period after that stock market bubble, right? Chop, chop, sideways. And you could have made money still along the way, right? During that 2003 to 2008 kind of rally there, you could make money. But if you just lost all your money in the crash of 2000, you might give up on stocks, or you might not be able to take advantage of the next bull run because you weren't really planning on a crash. Okay. So, when we're looking at that now, let's compare it to what gold was doing, right? So let's zoom out, get our drawing tool out here. So here's 1969, way over here, guys, on the left of your screen. That's 1969. And the value of gold was around, I believe, $30. Okay. Let's go check it out right there. See there, around $30. Okay. So, you'll see here that through the 70s, when they had to fight inflation for 8 to 10 years, the price of gold and silver went up massively. Okay. It went up to around $900 from 30. Okay. So you can just do the quick numbers on that, right? $30. It went up about 2,500% here. Okay. 25 times your money if you got it from the beginning to the end. Okay. And a lot of people don't know that. They don't know that. Okay. Then, afterwards, then it went down in price, right? And they kept lowering interest rates and doing different things. But look what happened again here now. Okay. Look at the 2000 stock market crash. Okay. That's 2000 right there. Okay. And then we had wars after that and different things, the housing bubble, right? All these different things. Look at gold. It went up nonstop after the crash, right? Because they were going to war and they were printing money with the housing bubble and doing all kinds of things. And then after the 2008 crash, right? This is the peak here of 2008. Then they printed more money and it went up all the way to 2011. Okay. So, I feel as though gold is going to be going into one of those moments again soon where, look what it does following every bull market, right? This is example number one, right? After the 60s nonstop bull market, where they had to start fighting inflation, right? This is number two, right? This is the post.com bubble run, right? When a big crash happens, they end up having to use monetary policies and money printing and housing bubbles and different things to get their way out and juice the economy up again. So gold had another run for a while, right? And it tends to run when people are afraid, as they were after the crash of 2008 as well. Okay, so you have a lot of different things going on, and I want to point out one last thing here, folks. Again, this is something I go over in the course in great detail. After a huge bull market where it goes up for a long, long time, the most bullish thing you could see long term is a cup and handle pattern, which tends to exit in the same direction that it began. So if it's a bull market, because on a long-term basis, right, the bull market I'm showing you is the post 2000 run because of war and housing bubbles and easy money. Okay. In between that, you have a correction period. And when the next crash comes, which we kind of are in the middle of, I think, right, globally, you exit that cup and handle pattern when they say, okay, guys, we've raised rates long enough. We haven't printed money in a few years. We got to fix up this economy. And that's kind of what they did, right? When George Bush said that everyone should own a home in 2003 and other examples in history. So I think one of those moments is coming. And at some point in 2023, 2024, 2025, somewhere in that range, I believe they're going to have to lower interest rates and start juicing the economy to keep it going. And that's the exact same thing that happened at the beginning of the 70s when gold went up 2,500%. Same thing that happened around 2002, 2003 when gold went up, I think 600% or so we saw earlier. Okay. Silver went up 3,800% in the 70s. A lot of people just aren't aware of that stuff. And I wanted to make sure that I pointed that out to you guys. Hopefully you found that helpful. I do that kind of analysis every week in my weekly training sessions, live for an hour every Sunday. If you're interested, go to the website, guys. It's under the services tab. Sign up. It's only $100 a month. And I do all kinds of analysis, let you know what stocks I'm in. And as I'm going through my position, where I might even take profits. Okay. Hope you enjoyed that video. See you on the next one. Take care.